On June 22, 2026, Ethereum ETFs experienced an unprecedented surge, attracting over $1 billion in institutional investment in just one day. This remarkable inflow marks a significant turning point for the cryptocurrency market, particularly for Ethereum's future. Here's what you need to know. As this trend of institutional investment in Ethereum ETFs continues, the implications for the cryptocurrency market could be profound. Over the past year, Ethereum has gained traction among institutional investors, who are increasingly viewing it as a viable alternative to Bitcoin. This shift is driven by Ethereum's robust technology and its leading role in decentralized finance and smart contracts. Analysts predict that Ethereum may experience sustained price growth if the inflows persist. This could lead to a stabilization or even an increase in ETH prices, providing a buffer against market volatility that has plagued the crypto space. Conversely, Bitcoin could face mounting pressure if altcoins maintain their upward momentum and continue to draw attention from investors seeking diversification. The growing interest in Ethereum also coincides with broader discussions regarding regulatory clarity on digital assets. U.S. Treasury Secretary Scott Bessent has been vocal about the need for a structured regulatory framework which could enhance investor confidence. This regulatory clarity may further fuel institutional adoption and investment in Ethereum and other cryptocurrencies as firms seek to navigate an increasingly complex landscape. The potential impact of these developments cannot be understated. If Ethereum solidifies its status as the new institutional favorite, it could reshape the dynamics of the cryptocurrency market, leading to a more diversified investment environment. This shift may also encourage further innovation within the Ethereum ecosystem, particularly in decentralized finance, DeFi, and non-fungible tokens, NFTs, which have garnered significant attention. Looking ahead, the key question remains: will Ethereum continue to attract institutional interest and solidify its position, or will Bitcoin reclaim its dominance as the leading digital asset? As institutional players weigh their options, the upcoming months will be critical in determining the future landscape of cryptocurrency investments, particularly as technological advancements and regulatory changes unfold. The rise of Ethereum as a leading platform for decentralized applications has significantly redefined the landscape of cryptocurrency investment. In recent months, Ethereum's advanced capabilities in decentralized finance, DeFi, and tokenized assets have bolstered its market position, particularly as Bitcoin continues to be primarily viewed as a store of value. This transition was catalyzed by the introduction of the Genius Act, signed by President Trump in July 2024. This legislation opened the door for major corporations, including retail giants like Walmart and Amazon, to explore their own digital currencies, thereby fostering renewed confidence in Ethereum's ecosystem. The Genius Act not only legitimized the use of digital currencies by established companies, but also encouraged innovation in blockchain technology. This has led to increased collaboration between traditional financial institutions and the crypto sector, enhancing Ethereum's appeal. Moreover, the recent performance of altcoins, such as Solana and Dogecoin, has created a ripple effect, igniting a heightened sense of optimism across the cryptocurrency market. A notable increase in the Fear and Greed Index, which surged to 63 from a neutral position last week, reflects this growing market enthusiasm. This shift in sentiment has likely played a crucial role in attracting institutional capital to Ethereum, as larger investors seek to capitalize on emerging opportunities in the crypto space. Analysts predict that as institutional adoption continues to rise, Ethereum could solidify its position as a dominant force in the decentralized finance sector. Looking ahead, Ethereum's potential for scalability and innovation will be critical in maintaining its momentum. With ongoing developments in Layer 2 solutions and interoperability, Ethereum is poised to not only attract more institutional investment, but also to redefine the future of finance itself. The next few months will be pivotal as the market watches how these advancements unfold. This record-breaking influx of over $1 billion into Ethereum ETFs signifies a major shift in institutional investment preferences within the cryptocurrency market. This remarkable surge highlights a growing confidence in Ethereum, which has been increasingly recognized for its utility in decentralized finance or DeFi, smart contracts, and tokenized assets. Unlike Bitcoin, which primarily serves as a store of value, Ethereum's versatile platform enables developers to create a wide array of applications, making it a focal point for innovation in the crypto space. This shift in preference is not merely a reaction to market trends, but is indicative of a broader acceptance of Ethereum's potential to revolutionize various sectors, from finance to supply chain management. The consequences of this trend are profound. Firstly, Ethereum is poised to potentially outperform Bitcoin in the near term as more institutional capital is directed toward it. This could lead to a re-evaluation of both assets, as investors reassess their portfolios in light of Ethereum's growing prominence. Secondly, Bitcoin's dominance may decline if altcoins continue to capture the attention and investment of traders and institutions alike. This scenario could foster a more diversified cryptocurrency landscape, allowing for increased innovation and competition among digital assets. Furthermore, the substantial demand driven by ETFs could help stabilize Ethereum's price, even amid short-term volatility in the market. As institutional investors enter the fray, their participation may introduce a level of maturity and stability previously unseen in the crypto markets. For the average investor, this development is crucial. It suggests a changing landscape where Ethereum may be seen as a more attractive investment option, thereby influencing investment strategies and market sentiment across the board. Increased liquidity and institutional backing could enhance Ethereum's resilience to market fluctuations, making it a more reliable choice for long-term investment. Looking ahead, the implications of this trend could reshape the cryptocurrency market significantly. As Ethereum continues to gain traction, we may witness further innovations and a broader acceptance of blockchain technology across industries. The future of cryptocurrency investment may very well hinge on Ethereum's ability to maintain its momentum, positioning it as a cornerstone of the digital economy. On Monday, June 22, 2026, Ethereum exchange-traded funds, or ETFs, received an astounding influx of more than $1 billion in new capital. This remarkable figure set a new record for the largest single-day inflow in the history of cryptocurrency ETFs. Interestingly, this surge occurred even while Ethereum's price experienced a slight decline of 2.4%, trading at $1,744.70. This juxtaposition highlights a significant shift in market dynamics, with investors increasingly viewing Ethereum as a robust asset class worthy of long-term commitment. In contrast, Bitcoin's price briefly touched a high of $122,800, while altcoins like Solana and Dogecoin saw notable gains of 9% and 8%, respectively. This trend emphasizes the growing appetite for Ethereum and other altcoins as institutional money flows steadily into the market at unprecedented rates. The context for this surge in Ethereum ETF investments can be traced back to recent advancements within the Ethereum network. The successful implementation of Ethereum 2.0 has been pivotal, aiming to enhance scalability and reduce energy consumption. These improvements bolster confidence among institutional investors who increasingly prioritize sustainability and efficiency in their portfolios. Additionally, recent developments in regulatory clarity surrounding cryptocurrency assets have made it easier for large financial institutions to engage with these digital assets without fear of compliance issues or legal repercussions. The impact of this record inflow is profound, as it underscores Ethereum's growing legitimacy as a mainstream asset. It also signals a shift in investor sentiment, moving away from the traditional Bitcoin dominance towards a more diversified crypto investment strategy. As institutional capital continues to pour into Ethereum, we could see increased price stability and further adoption of decentralized finance, DeFi, applications, which are heavily built on the Ethereum blockchain. Looking ahead, the outlook for Ethereum appears increasingly optimistic. Continued institutional investment may drive further innovation and development within the Ethereum ecosystem. Analysts predict that if this trend persists, Ethereum could solidify its position as a leading cryptocurrency, setting the stage for transformative developments in the blockchain space. Enhanced interest in Ethereum ETFs may also encourage more retail investors to explore the cryptocurrency market, further expanding the digital asset landscape. As Ethereum continues to attract unprecedented institutional investment, the future of the cryptocurrency market hangs in the balance. What do you think will happen next? Share your predictions in the comments below and subscribe for daily deep dives.